Okay, time's starting to run out now. We need to get some kind of bounce if we're going to reclaim any kind of bullish levels in the market. In the meantime, there are 5 big risks to crypto that can materialize very, very, very soon. And if they do materialize, then it does take us into the bear market and down to the $70,000 or $75,000 level. I want to assess each one of these risks, and I want to show you what the probability is of the risk actually materializing, because I think it's quite important. And then at the end of the show, we'll actually look at like the opposite of risks, so opportunities or whatever you want to call it. But I think it's important that you talk about the 5 risks. One of the risks is the NVIDIA earnings, which we're going to spend a lot of time on today, because the NVIDIA earnings can pop the AI bubble. And if they do pop the AI bubble, well, then the S&P is going down, the NASDAQ's going down, and there's no way Bitcoin's going to withstand that. So we're going to talk about that, 4 other big risks that could hit the market today. And then, yeah, guys, I think we need to bounce. So, big show. Let's get a show on the road, guys. Wakey, wakey, rise and shine. If it's your first time here, you know what to do. Subscribe to the channel. If it's not your first time, what are you doing here? Why would you ever come back? Why would they ever come back? Who knows? Guys, 5 big risks because we need to bounce now. And, you know, the problem is that, as I said yesterday, we are in this place where we could be between a bull market and a bear market. I mean, from a technical standpoint, the bears are pretty much in control now. From a fundamental standpoint, well, the problem is that the fundamentals can justify any situation. And so we really need this market to bounce if anything is going to happen, right? Remember, theoretically, if we want the market to bounce, there's 2 reasons for it to bounce, or two expectations from the bounce. The first thing is, if this is a bull market and we've just had the death cross, we should bounce, and we should bounce pretty soon. And if we don't, time's running out. Like, we can't bounce in a week or 2 weeks. It needs to be now, in the next 2-3 days. If we don't bounce in the next 2-3 days, then we can kind of conclude, because we didn't bounce after a death cross, that it's a bear market. The next thing that needs to happen is we need to reclaim this 50 EMA, which is at 103,000. Now, the problem is that right now we're like 10% below that, or 11% below that, or maybe even 12% below that. And we need to get there before the weekly close, which happens on Sunday. Now, we're on Wednesday, and where I am, we're almost heading into Thursday, right? So there's a lot of things that need to happen very, very quickly. Otherwise, time is running out. And if we don't claim those levels, we have to concede that maybe we actually are in a bear market. In the meantime, what we know is that this correction is starting to become one of the most brutal corrections in the cycle, right? So the most brutal correction in the cycle on Bitcoin is 32%. Right now, we're standing at minus 29% on the Bitcoin correction. And it's not only the Bitcoin correction, it's also the NASDAQ and the S&P. So if you look at the NASDAQ and the S&P, this is where they're at. Now, I want to talk a little bit about this because I think they're being a bit dramatic, if you ask me. Like, okay, the markets are down 4%, 4.2%. After having run, well, let's go back to 2025, beginning of 2025, somewhere over here. Yeah, like somewhere over here. I mean, they're still up 15% this year. So I think they are being a little bit dramatic. But be that as it may, they are having their worst months in a long time. I think I read a stat here. S&P is on track for its worst November since 2008. Can you believe that? Worst November since 2008 for the S&P, negative 3.26%. 3.26% is what we get on like an average afternoon on Bitcoin. And these guys are saying it's the worst November that the S&P's actually had. I actually verified that stat on into the cryptoverse. Why do I say I think they're being dramatic? Because their market's 4% away from an all-time high. These guys are in extreme fear to 12. Like, market's at an all-time high, guys. You've had, like, in the last 2 years, I mean, I just want to put a little bit of perspective here because I think perspective is important, right? So if you go to January 24, which is 2 years ago, January. In fact, let's go 2 years. 2 years ago now is about here. No, it's about here. So in the last 2 years, these guys have had a 60% return on the stock market, and they're 4% away from the all-time highs, and everyone is in peak fear. And I think the reason why they are in peak fear, it's actually, you know, you're nodding, but it's actually the same on Bitcoin. Yes, okay, I know. It hasn't been the best 2024 2025. It hasn't been like a great year in 2025. But if you zoom out, and this is what 𝗥𝗡𝗏 did, he zoomed out and he pretty much says, a week ago, we lost a near 1,000-day uptrend, which according to his 2 seconds of checking was the largest uptrend in Bitcoin history. Maybe give it a minute before you talk about everything changing. Like we've had a 1,000-day uptrend in Bitcoin. Yes, okay, we broke it. Not good structurally on the charts. I'm going to make another video, which I'm going to post on the other channel tomorrow, around the chart structures versus the fundamentals. Highly, highly, highly recommend that you guys watch that. Can you mail Naz and tell him to mail that script to Johan so we can get it done after the show? Yes. All right. Why is the market so scared? And specifically, why is the market at 12 on the stock market at 12 on the fear and greed? Let me tell you why. Because today we have a very, very, very big event in the market. It's the NVIDIA earnings. Now, if you're wondering why the earnings of one company are one of the biggest events in the stock market is because one of the biggest fears in the market right now is that we're in an AI bubble. And the AI bubble, the biggest company in that alleged AI bubble, or in the AI bubble that people talk about, is NVIDIA, right? I mean, if you look at the stock performance of NVIDIA, it's absolutely crazy. It's outperformed most of the biggest altcoins. If you look at what it's done just this year, so if we go to, let's just look at what it's done this year. So if you look at what it's done this year, just this year, it's done 36%, which is about 36% more than Bitcoin's done. No, it's about 46% more than Bitcoin's done, right? So why is this such a big event? Because if you look at the Mag 7, or if you look at the S&P 500, the S&P 500 is being carried by the Mag 7, the Magnificent 7, right? Which is NVIDIA, which is Google, which is Apple, which is the Mag 7, you know the Mag, Meta, etc., etc. The problem is that the Mag 7 have been fueled by an AI bubble, or what people are calling an AI bubble. And the problem is that if indeed this is an AI bubble, if one company, or specifically the biggest company, the one that is the head of this AI revolution, reports bad earnings, people could panic and see that as a sign that indeed the AI bubble is actually starting to pop. Now, those results happen tonight. And traditionally, NVIDIA actually does beat expectations, right? So if you go back and you look at the NVIDIA earnings and you look at the estimated EPS versus the actual EPS, most times NVIDIA actually beats earnings. And right now, if you look at Polymarket's giving us a 90% chance that NVIDIA is going to beat their earnings. And if you look at the price chart of NVIDIA, price chart doesn't look like a worried price chart, right? Yes, the market has come slightly down with the rest of the market from 210 all the way back to 180. But currently, if you look at this, there's an 84% chance or 91% chance that NVIDIA is going to beat the expectations from the earnings. What are these amazing expectations that people have from NVIDIA? So Wall Street expects an earnings per share of $1.26 and a revenue of $55.2 billion with a gross margin modeled at 73%. That's, by the way, coming from our Frontrunners club. We'll talk about Frontrunners later, but if you're not already subscribed to Frontrunners X, it's at Frontrunners X. Go and subscribe to it because there's a lot of alpha coming out there. We've got this guy. He's a wizard of alpha, and he's now running the Twitter account. He's also a nurse, believe it or not. He's a registered nurse, and he's a wizard of running these things. Anyway, getting back to the story here. So that's what the market's expecting from NVIDIA. If NVIDIA underperform on their results tonight, then brace yourself. Have margin in your leverage accounts. Brace yourself, because that's going to send down the entire S&P 500. If the S&P 500 goes down, you can rest assured that Bitcoin's going down with it. If NVIDIA underperform on their results tonight, all hell is going to break loose on the markets. Don't forget that Rand told you so. As I said, I do believe that, or Polymarkets believes that they will beat the expectations, but you've got to be ready for the unexpected. Why is the market so worried? So the market's so worried. Well, I can show you the symptoms of a worried market. The first thing is big investors, people like Peter Thiel. Michael Burry, he puts the majority of his short position on NVIDIA. Remember, he shorted 2 stocks, Palantir and NVIDIA. Those were the majority of his short positions. The other person who has been selling is Peter Thiel, right? So Peter Thiel has been publicly, he sold his $100 million position in NVIDIA now. And that's raised expectations or raised suspicions that the AI bubble, that AI may be in a bubble and the bubble may pop. And that pop may be NVIDIA reporting or not meeting their results. I would imagine that if they weren't meeting their results, it would have leaked and by now the prices would have been down. But you never know. You never know. And so I think we're okay. But what's the market worried about? Effectively, the market's worried about four things with NVIDIA. And it's not only NVIDIA, it's the AI bubble. The first thing that the market's worried about is it's worried about sustainability of earnings. It's kind of saying, look, we're expecting massive growth in earnings from these AI stocks. And are they really going to actually achieve those results? That's the first thing. So sustainability of AI earnings is one of the four concerns that the market has around this AI bubble. I think this was brought to a head when Brad Gerstner interviewed Sam Altman with, I think it was, who was on there? I think it was...
Can the company with 13
Jensen
billion
Hunger, one of
in
the other big
revenues
guys,
make 1.4 trillion of spend commitments? You know, and you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer.
Oh, it was Satya Nadella from Microsoft.
If you guys were, are doing in excess of $100 billion of revenue in 28 or 29, that you at least would be in position. What?
So
How about
you
27?
kind of remember this awkward interview that was had, and that raised suspicions around, like, these guys are making massive capital commitments. Those capital commitments are being factored into other companies' earnings, right? Like the capital commitments that they're making to NVIDIA are being factored into NVIDIA's forecasts. And if these guys can't meet their revenue earnings, and how they're going to carry on investing in all the NVIDIA servers and whatever else they're going to be buying. And so that brings me to the second point that they're worried about. They're worried about sustainability, but they're also worried about this. What's the right word here? When all these companies are just like dealing with each other. So OpenAI does a deal with NVIDIA, which does a deal with Oracle, which invests back in AMD, and it like created this whole web of like these companies basically like stroking each other's. I don't want to say that, but you know what I'm saying, right? Like it's like these guys are like, I'll buy from you, and then you'll invest it in them, and then they'll buy from me, and then I'll take the forecast of them buying from me and I'll invest it back in you, and then you'll go buy. And that's what the market's starting to worry about. They're starting to worry that this whole AI bubble is one massive Ponzi, which is being fueled by massive expectations of these people dealing with these people. And as soon as one of these people can't pay their, Alessandro says it's circular economy is the definition. Okay, it's a circular economy is the definition. So it's a circular economy. So that's another concern. The other concern here is that AI is currently a circular economy. Thanks, Alessandro. The next concern that people have is the amount of capex that these AI companies now have to spend. So I read this tweet, and this tweet I think actually worded it pretty well. It kind of said, by the way, before I read that tweet, here's another tweet. And here it says, NVIDIA, Microsoft, and Anthropic announced a new strategic partnership. Anthropic to buy $30 billion of Azure Compute. Okay. NVIDIA to invest $10 billion in Anthropic. Microsoft to invest $5 billion in Anthropic. NVIDIA and Anthropic to collaborate on the design and engineering. NVIDIA and Anthropic to establish a deep technology partnership. Basically, I don't want to say it because the explanation I have is not a good explanation. But basically, it's got to do with my girlfriend and your girlfriend, and you know what I'm talking about. Okay, you know what I'm talking about, right? Okay, so that's what they're worried about. They're worried about the circular economy. Thanks, Alessandro. It's let's just call it the circular economy. And also, let me know in the comments if you've ever been involved in a circular economy. Yeah, let me know if have you been involved in a circular economy before. Theo, have you been involved in a circular economy? How old are you?
29.
29, you got time, but you should. But you really should try it. Like, you really should try a circular economy. The economics of a circular economy are quite, what's the word? The economics of a circular economy are amazing. All right, the next thing this is supposed to be an adult show. The next thing that they're worried about is the amount of capex that these companies now have to take, because you can see that this, as this tweet said, Mag 7 is now undergoing a shift from asset-light cash flow monsters that funnel their retained earnings into endless stock buybacks, and now they're turning into asset-heavy machines with aggressive amortization schedules. And the market's kind of going, hold on, these companies used to make money from advertising, and they used to make a lot of money, and now they're investing in these massive data centers, and they need massive capex. And that's really starting to worry the markets, right? So sustainability is one. The nature of the partnership they're doing, the circular economics is another one. Capex is the third one. And the last one is valuations. So the valuations, by the way, so the valuations right now, if you look at the valuations chart, and the best way to look at the valuations chart is to look at a PE ratio. And if you look at the PE ratio, we're actually pretty high. We're like quite high. The PE ratio takes the forward earnings of a company divided by its price. And we're almost at .com bubble levels, right? That's if you look at where the S&P is now versus where it was. So that's the four concerns that they have. They're saying, look, number one, you're overvalued relative to PEs, almost at .com levels. Number two, you're now not this cash generating stock buyback monster. What you're now doing is you're using all your money to invest in infrastructure, etc. The third thing that they're worried about is Theo's circular economy. And the fourth thing that they're worried about is the sustainability of the earnings. Can they really, really, really sustain the earnings? Now, to be honest, I think that a lot of these are just big worries. I do believe that AI earnings are sustainable. I do believe that it's the biggest revolution. And I think if you look at the growth of OpenAI and how quickly they've grown their earnings and Sam Altman's ego, it's quite fascinating that it's happened. Also, if you look at historically at other bubbles, and again, I got this from the Frontrunner Twitter because we have a nurse and our nurse writes post Twitter accounts also, so it's got a good combination here. Look at where the NASDAQ 100 is now relative to other bubbles, like the Great Depression, the gold boom, the dot-com bubble. We're not at massive bubble type valuations yet, right? But definitely worth keeping on the radar, because remember, all we need is NVIDIA to miss their earnings today, and then, then we have to be live. If NVIDIA miss earnings tonight, we have to. But it's very late. It's late. You guys are going, what? You're saying, you're going to have to be back here 11 o'clock tonight. It's very late. Very, very, very late. Okay, so that's the first. Llewellyn says bliksem. The South Africans know what bliksem means. All right, that's the first risk to the markets. Second risk, remember I told you there's going to be 5 risks. Second risk to the markets is, do you know what the second risk is? Fed rate cut, which is still a risk. Massive risk to crypto at the moment. Why? Because, bro, these guys are still on 50-50. They still haven't made a decision as to whether or not there's going to be a rate cut. And people are starting to panic. Who's starting to panic? Well, specifically Trump and Bessent are starting to panic. How do I know Trump and Bessent are starting to panic? Because I watched the interviews last night, right? And Bessent was saying things like, Trump will sit down with new Fed chair candidates soon, would love to get Powell out right now. People are holding me back from firing Powell. Think I already know who my Fed chair choice is. These guys are panicking because it's Trump on the one side, it's Bessent on the other side. Bessent says he basically, because they don't speak to each other. It's like, okay, so let me give you a great analogy, right? Let's say that you're not supposed to be talking to your ex-girlfriend, but you want to send her a message. So now you go onto TV and you talk to the producer on TV, but you're actually sending the message to them, right? That's exactly what's going on now with the Fed. So Bessent isn't phoning Powell and saying, listen, look, bro, you really should cut rates because I think it's a good idea to cut rates. And, we didn't get data and the economy was closed and you should cut rates. It doesn't work like that. They go on to Fox News because Fox News is very Republican, very, 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 very right-wing. And they send messages to one another. And we're just like the listeners. We're just like, it's like we're just listening to them sending messages to one another. Here's the message.
We have an answer, do you think, from the Fed about another cut? Do you think that's where they're going?
I hope it's where they're going because when you're in uncertain times and after what this Schumer shutdown did to the economy, I would think that if you're not taking out an insurance cut here or if you're flying blind, they say, well, we don't have data. Well, if you don't have data, then that's what insurance is for. So I would encourage them. They've gone into a cycle, so let's go 1, 2, 3, and we can see from there.
So, I
continue-
mean, if you think that that was a random interview, like just listen to the wording. Insurance you only take in case of like massive risks. Economy was closed. If you don't have data, err on the side of caution and basically cut, because economy, you see, it's a message. It's a very, very, very strong message sent to Powell saying, look, I know you don't have data, but it would be irresponsible of you if you don't have data to go on the side of being conservative, because the government was closed and the economy was at a halt and we lost a lot of money and therefore we probably lost a lot of jobs. And what does that mean? It means that they have to cut. So Trump and Bessent are putting a lot of pressure on Powell to actually cut. I mean, they were asked about the stimulus checks. And the stimulus checks, you know, they're talking about a $2,000 stimulus check, which if you're Powell, that's scaring the shit out of you, because you're thinking, I'm going to cut rates. These guys are going to put stimulus into the market. That's going to send inflation skyrocketing, right? And you know what he said? He actually said, Bessent tells Brett, maybe recipients can be convinced not to spend the money, and why they want to actually put the stimulus checks directly into stock, into investments and into the market for people. So that's the other big risk now. The other big risk is, are we going to get this rate cut or we're not going to get this rate cut? There's an interest rate, there's an inflation decision, right? There's an inflation decision that's coming out on the day of the FOMC. But as I said to you guys yesterday, that's too late. Like the FOMC is on the 10th, or the results of the FOMC is on the 10th. The inflation reading is coming out on the 10th. Like even if the inflation is very low, by that time the guys have already decided. I don't think they're then going to call like an emergency vote and say, look, you know, maybe we were wrong. We should quickly just vote again. You know, who votes? I do tell you one thing though. If there's no interest rate cut, there's going to be a lot of dissents from Fed governors. I reckon at least like 40% of the Fed governors are going to say, look, we believe, because the Fed is very, very, very divided. And I kind of understand why they're divided, because wouldn't you be divided if you weren't getting any data and you were making decisions that affect millions and millions and millions of people? So anyway, that's the second risk. The NVIDIA results, first risk. The second risk is the Fed issue, the interest rate issue. The third risk to the markets is Japan. So, you know, what's going on in Japan? Well, quite simply, if you look at the Japanese 40-year treasury yield, which is like their long-dated treasury yield, look at the spike in treasury yields. The reason why you don't want to see a spike in long-term treasury yields is that it means that people are losing faith in the long-term, not sustainability, but the long-term prospects of the country, or the long-term stability of a country. And therefore, they're commanding a higher premium to hold longer-dated country debt. And what's happening now is that the Japanese 40-year interest rates are spiking, and the Nikkei, which is the Japanese market, is falling. Okay? So why is it happening? Well, the reason why it's happening is because Japan has a problem. Japan has inflation, and the inflation keeps going up, right? So Japan has inflation. The inflation keeps going up. At the same time, they have a very, 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 very high debt to GDP ratio, right? Japan has one of the highest debts to GDP ratios in the world after Sudan. And Sudan is, I mean, not in great shape. So I apologize if we have any Sudanese listeners, but I think your economy is not in good shape. Someone says dump, but bro, there's no dump. At least not where we are. So Japan has high inflation. Japan has high debt to GDP. But Japan is also talking about a $110 billion stimulus now. So imagine you've got inflation and you've got high debt, and the government now says, okay, no, but we're also going to give residents a $110 billion stimulus at the moment. It means that the government's going to be taking on more debt, right? So you've got more debt and you've got higher inflation. How are you going to curb the inflation? You're going to have to increase interest rates. So you've got high debt. You've got now going to increase interest rates, right? High debt, increase interest rates. You already got a high debt to GDP ratio. It basically means that Japan is abandoning their, I'll read this to you. It says, Japan is considering a $110 billion stimulus package now, and that's the reason bond yields are spiking. Japan already has insane debt, 230% of GDP. When you're already drowning in that much debt, announcing more spending without raising taxes or cutting anything else sends a clear message to the market that this government doesn't care about fiscal sustainability. Bond investors lose confidence, and they're thinking, how are we going to pay this back? So they demand higher yield to compensate for the risk. So that's what's going on in Japan at the moment. And that's really, really, really scaring markets now. And the one thing we know about Japan is one of the largest economies in the world. It's not like a small economy. It's one of the largest economies in the world. And the problem is that if interest rates go up in Japan, we could start hearing talk about the cash and carry trade unwinding, which we spoke about yesterday. So I'm not going to talk about it again today. And so that's the other risk that's facing the market at the moment. Luckily, that risk is not as imminent as like the NVIDIA results, which is coming out soon, or the Fed interest rate cuts, which is happening in December, 10th of December. The next risk, which is now the fourth risk that I want to talk about, is also in Japan, believe it or not, but this time it's mt.gox. So for those of you who don't know, mt.gox was an exchange that was hacked. They managed to seize the Bitcoin, and the Japanese government has been sitting on those Bitcoin for 14 years, if I remember correctly. 14 years? Yeah, about there. 14 years. 10, 11, 12, 13, 14 years. And they now have to pay back the Bitcoin to the Bitcoin holders because there was a whole lot of Bitcoin holders that held the Bitcoin in mt.gox. Now, yesterday, because this is exactly what they always do every single time, after saying that they wouldn't be making any more payments and they changed the repayment deadline and they said that the repayments are going to be happening in 2026, well, now they moved a whole lot of Bitcoin. So if you look at the Arkham account, they moved a whole lot of Bitcoin, and they moved 10,000 Bitcoin, which is about $1 billion, which means that they could be distributing some Bitcoin, right? Now remember, they've got $3 billion worth of Bitcoin. Now I'll tell you something. I've been here for so long, and it always feels like in the midst of the correction, when everyone's panicking, mt.gox starts to move Bitcoin. It's almost like the liquidator's watching, and like he's basically like entertaining himself. He's like, ha 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 ha. And you know what I mean. So yesterday they transferred $16.8 million of Bitcoin to Kraken. Kraken is one of their distribution agents. So if you want to get your mt.gox reimbursement, one of the places you can do it is Kraken. And so now people are a bit worried that the mt.gox trustees are going to effectively start distributing Bitcoin, and those people are going to start selling Bitcoin into this market. And already there's no demand in this market. Speaking actually of no demand, let's actually look at what the ETFs did yesterday. Was it an inflow or was it an outflow? Outflow of $200 million. See what I'm saying? So the last thing we can now stomach is $3 billion of mt.gox coins actually hitting the market. So that's the fourth risk. The fifth risk is pretty much a risk to our bull market, right? And that is if we don't climb up to this 50-week SMA by Sunday, then like we risk breaking, I'd say, one of the last bull market structures that we actually have, right? So that's the fifth risk. The fifth risk is we have like 4 days. We have a Thursday, Friday, Saturday, Sunday. So 3.5 days or 4.5 days to climb about 11% on Bitcoin. Not going to say it's impossible, but I'm going to say with the momentum that we currently have, it's not, someone said California surpassed Japan's economy. Okay, someone says, talk about fartcoin. Is fartcoin still a thing, bro? It's not even a thing anymore. So that's the 5 risks, guys. The first risk is the NVIDIA results. That's happening tonight. The next risk is the FOMC and them not actually reducing interest rates. The next risk is the mt.gox creditors actually starting to move money. Then the next thing is the Japanese just being financially responsible. And the last risk is that we don't actually close above the 50-week SMA. That would mean that it's a second close not above the 50-week SMA. 2 closes not above the 50-week SMA means that potentially the bull market's over. Quite scary. Anyway, look, the good news is, I mean, there's a silver lining. The good news is that at least some of our coins are really, really starting to move. Like, I don't know, Starknet. This is one of those coins that I've been very vocal about in Frontrunners. So let me actually go to my channel in Frontrunners. Guys, if you're not already subscribed to Frontrunners, do yourselves a favor. Catch the Black Friday specials, because we're not going to repeat the Black Friday specials. I can tell you, as I said to you guys yesterday, I was very, very, very much against doing a 50% off. And in like a week, this 50% thing off ends. It's $1,199 for a year it's usually $2,400. Just give you like, I mean, here are the receipts. Like you can see that we called it. I want to actually just find my channel. There's so many channels. There's so many things going on here. Here we go. So literally, I was like, guys, buy StarkNet. I told him to buy StarkNet at 15. Where is it? Here we go. 14.98. Told the guys to start. This was when it was already printing. So we actually told them before to start buying it. Luckily, that trade is now up over 100%, even in this kind of market. Now, inside Frontrunners, there's a lot of these calls. There's the Irishman section, their trade setups. There's probably 10 analysts that are posting in here. It's the most vibrant group in crypto. There's over 2,000 people in the group. If you want to join the group, I've said it to you before, I was very against a Black Friday special. The guys convinced me that they wanted to run it. You should actually take it up. There's a link below to that Black Friday special. Also, there's another Black Friday special, which is Bitfunded. If you want to trade with other people's money, go and buy some Bitfunded packages because you're getting 6 challenges for the price of 3, which is like crazy. Again, look, Black Friday is like probably the best time to buy your crypto things. I always buy my TradingView subscription on Black Friday. Lastly, if you are a trader on Gravity, there's a trading competition that's happening, which starts on the 21st of November. You can win $15,000. So if you want to trade on Gravity Dex, and at the same time, you'll be entered into our Banter Royale, which Sheldon's doing on Friday with big prizes, then that's where you go and do it. All right, chaps, let's quickly look at the market one last time. Has there been a bounce? No bounce. Look, let's talk seriously. What are we going to do if the market doesn't bounce? Like, if the market goes now to like 70, what are we going to do?
Pivot to AI.
Pivot to AI, eh? Not a bad idea. So we'll make a deal. If Bitcoin gets down to 70, we all pivot to AI. I mean, you know why I like AI? It's not a bad idea. Because of the circular economy. I'll see you guys again tomorrow. Until then, trade well, my friends, even if you're trading in a circular economy.